Thank you.
Turning now to the economy, new job numbers out today show that for the first time in 12 months, reality did not meet expectations. Several leading economists have gloomy predictions for the months ahead. The economy added 236,000 jobs last month. It's good, but it's also the lowest monthly increase since December of 2020. The service economy led the way. It accounted for more than 8 in 10 jobs added in March as places like hotels and restaurants added workers. The unemployment rate dropped slightly to 3.5%, but for Black Americans, it hit the lowest level on record, 5%, down from nearly 17% at the height of the pandemic. Joining us now is the founder of investment management capital firm Skybridge Capital, Anthony Scaramucci. Anthony, great to have you here tonight. Former Treasury Secretary.
Congratulations on the show.
Oh, thank you. Former Treasury Secretary Larry Summers and J.P. Morgan's Jamie Dimon both have said today that we're on track for a recession. Do you agree?
I agree to the extent that I think it'll be a mild recession. I don't think it's going to be a steep recession. The good news is you've got a lot of pent-up demand, and you also got the $1.7 trillion spending bill that was just passed by the Congress. So I think it's unlikely to get a steep recession, Elizabeth, but I do think we have to coordinate our strategy better because the Fed is raising rates to try to slow down the inflation, but on the fiscal side, the Congress is spending, frankly, a wild amount of money and pushing a lot of prices up through government demand on the spending side. You saw 47,000 government jobs added, which gives you a sense for the demand that's being driven by the government. So it's counteracting what the Fed is doing, frankly. So I think there's some frustration by inflation hawks because of what's going on in that realm. I think the very, very good news, though, if we're patient, a year from now, I think you'll see those inflation numbers trend down because we just have so much technology coming on that's going to lead to price improvement and price reductions. And then, of course, you've got the supply chain almost fully reconnected post-COVID. So I think there's a lot of good news ahead, but yes, some short-term and near-term trouble for the economy.
What does this mean, do you think, for the Fed? Will they still raise interest rates when they meet next? Some people were hoping that, today's numbers were good news for the Fed, as in no more action, no more raising of rates, at least at the next meeting. What do you think?
So this was sort of like mama bear news. It wasn't great news and it wasn't really bad news. And I think the inflation hawks on the Federal Reserve Board are going to win this one, and you'll likely see another 25 basis point hike. Remember, this is the fastest amount of hikes, over 500 basis points in a 20-month period of time. So this is sort of the fastest hikes that we've had in 40 years. It is disrupting the regional banks, and it is having an effect on the economy in terms of slowing it down. But frankly, it hasn't been enough to blunt the full force of the inflation.
I was interested. Jamie Dimon was citing the recent bank failures as one of the reasons for economic jitters right now, but he is also arguing forcefully against any more government regulation of banks. Do you agree with that position?
I do agree with that position. I think he's making the case that the overregulation is sometimes putting the banks in a difficult position, not to get overly complicated, but they were owning too much treasuries. And when the Fed raised rates, the value of those treasuries went down. And that's what really caused the panic in the banking sector. I think what people like Jamie Dimon would like to see is the FDIC raising the limits. Right now, your deposits are guaranteed for $250,000. I think we would like to see maybe a $5 or $10 million limit on those, meaning raise it to $5 or $10 million.
Wow, that's a big jump.
And even if you just did that for 2 years, it's a big jump, but I think it's necessary because these regional banks are really the glue and the financial services lubrication, if you will, for all of our small businesses. And a lot of payrolls are tied to those banks, and of course their accounts are way larger than $250,000. If you don't do that, you'll cause a lot of people to take their money out of those banks and put it in the big ones like J.P. Morgan. But I think there's simple steps we could take to protect the banking system.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.